Well, hello. Welcome to Passive Wealth for High Tech Minds podcast. There are lots and lots of IT professionals who work in the industry. These IT jobs are so exhausting mentally, there isn't much time left for such folks to make clever decisions about their investments. Most are unable to put their money in the right asset classes. This is Prashant Kumar from My Realty Gains. I have worked in corporate America in IT and in business organizations for 25 years. My goal is to educate IT professionals like you about the benefits of passive investing. I will be passing my knowledge and will bring guests who have done very well in their careers and can explain the process and advantages of passive investing. So, let's begin. Hello. This is Prashant Kumar from My Realty Gains. I'm here today with a distinguished guest, Arn Cenedella. And Arn, thank you so much for being on the show today.
Prashant, happy to be here, and thank you for the opportunity to speak with your listeners.
Very welcome. I want to introduce you formally, with 35 years of real estate brokerage and investment experience in Silicon Valley. You have built single-family rental portfolio in San Francisco Bay Area and in other parts of US also, right? You relocated to Greenville, South Carolina in 2014. In 2020, you formed Spark Investment and transitioned your portfolio to multifamily properties. Spark helps busy professionals and parents to invest passively to create income and time freedom. So having said all this, I know, and we were talking earlier, how technology folks are consumed in their jobs. The purpose of this podcast is to kind of educate all these techie people. They are working very, very hard. I have worked for 25 years, and it's a very consuming job, not just physically, it is mentally consuming job. Those are mentally consuming jobs, and folks come back home and they don't have time to think how their money can continue to grow while they are working at their jobs in front of computer 24/7. And you said that, you have huge technology background. Your wife has worked in Intel. I would like to hear from you. What's the message that you want to give it to the list to these listeners, who are working but don't have stamina left to, they don't have financial acumen, how to grow their money.
Sure.
So I would like to have your experience, your knowledge for my listeners.
Sure. Thank you. So it's a great question. And yes, I spent most of my life in Silicon Valley. And as Prashant mentions, my wife worked for Intel, Intuit, and Visa. And so I can personally testify to how tired she was when she came home after a hard day working. So I totally understand the demands on the time of tech professionals, whether in Silicon Valley or in India or China. It's a strenuous job, well compensated. But yes, you have family, friends, community, church, in addition to work. And you only have so much bandwidth. You only have so much energy to give. And so how do you invest? How do you invest safely and securely? And from my experience in Silicon Valley, almost every tech worker I know is heavily invested in the stock market. So one of the benefits, I think, is diversification. Take a certain percentage of your nest egg and invest it in hard, tangible assets that create cash flow and some tax benefits. So I think passive investing in multifamily properties is a great way for tech professionals to, one, diversify their portfolio, create some tax benefits, but more importantly, allow real estate professional, property operators, managers run these businesses, and they're basically multi-million-dollar businesses. Let them run these properties to their peak efficiency to provide you the highest returns with still a fair degree of security. And as we've seen recently, the stock market can be a little volatile. So I think some real estate investment should be a part of everyone's portfolio.
So when you see real estate investments part of somebody's portfolio, and I like diversification, I just want to reassure, does it mean that you are suggesting the listeners to go buy real estate themselves and manage it themselves? Or
Yeah.
what is that you are suggesting?
Yeah. So I believe in specialization of labor. I have a master's degree in PChem from University of Michigan. I got it and I went into the real estate business at the age of 22. And that's what I've been doing for actually now over 40 years. So real estate, like any other profession, takes knowledge, skill, experience, and expertise. So many people have that expertise, but if you're one who hasn't invested in real estate and developed that experience and expertise, in my mind, it's better to let real estate professionals manage the properties and your money. So, for example, I would say about half my net worth's in the stock market and the other half in real estate, and that's a decent diversification for me. I have a financial planner that handles the stock portfolio. I don't know anything about stocks. I trust him implicitly. So I let him handle that side of my portfolio because that's what he's an expert in. I'm a real estate expert. And so I see great value in working with experts in a variety of areas to best manage your money.
So you are really saying that, folks like us, I mean, I was a tech professional also, Arn, by the way, and I worked myself, on the ladder in the organization, but still the work was work, it was very time consuming. What you are saying is I should start trusting those who do real estate business and sort of invest with them and let them do the job correctly because they know what they are doing. And in the end, whatever they are doing, your investment is secured by real estate and you are getting returns and considerable part of the returns. Yes, those professionals do make some money out of it, but the returns that you are getting and the time freedom that you would get are way more worth more than potentially you doing it by yourself and potentially making mistakes also.
Yes, I mean, I could go to Google, I could go to YouTube and try to learn something about medicine, but that's why I have a general practitioner. That's why I have medical specialists. And so I trust them to make recommendations to me for my medical and health care. So real estate's really no different. So yes, I totally agree. And I think you hit on a appropriate point, an important point is there has to be an element of trust. So you need to develop a relationship with people in the real estate industry and make some kind of assessment about certainly their ability and knowledge, but also their character and integrity. So I'd say the personal connection is very important. The other point would be, yes, as general partners, as syndicators, we are compensated for our efforts. But if you look at how and when the general partners are compensated, you will see most of their compensation comes at the back end of the deal only if they perform, only if they provide you your projected returns, then yes, they get some compensation. If they do not perform, that really adversely impacts their compensation where your returns are taken care of first. So it's fair compensation and it's only paid if we earn it by doing a good deal and providing good returns to our investors.
So you hit a very good point. I mean, for the listeners, for the folks who are listening, is basically their returns are paid out first before the sponsor gets paid, and sponsors' returns really depend on how the property is performing. in normal scenario, investors' returns will get paid unless the sky is falling apart. Anything could happen in the world. But in a normal scenario, investors' returns do get paid irrespective or whether a sponsor gets paid or not. So that kind of gives a mental satisfaction that from my money, somebody else is not making money. I am making money first.
Yes.
From my money, then somebody else may make money if they do better job. Is that a fair statement?
Absolutely. Exactly. Perfectly said. Nail on the head.
Awesome. So Arn, tell me a little bit about yourself. I know you are in real estate. You are doing some good stuff. You have been doing it. You have been a broker. I mean, you have this company, Spark Investments. What are the good things that you guys are doing?
Well, thank you. So, I've spent my entire career in real estate, most of that time in single family brokerage and investing. And within the last couple of years, as you mentioned earlier, I've transitioned pretty much my entire single family portfolio into multifamily, located in Greenville, South Carolina. So my primary markets are South Carolina and North Carolina, more specifically Greenville, South Carolina, which is booming, and then an area called the Triad in North Carolina, which is Winston-Salem, Greensboro, which is about an hour from Raleigh-Durham, which I'm sure most tech professionals understand is kind of a world-class concentration of very smart engineers and software designers. So the Carolina markets are strong, population's growing, businesses are coming here. And so my focus is primarily on the Carolinas and constantly looking for opportunities to acquire good assets, run them properly, and provide good returns for the investors. And you make a good point about the future is somewhat unknown. Things can happen that are outside our control, which of course will impact investor returns. But as we see today with the stock market and rising interest rates are killing the stock market right now and so forth. And so the approach my partner and I take is be smart about the assets we buy, know the market that we're buying in, because the local market knowledge is really critical. And then at that point, we have to operate that business, that asset, that apartment building in a professional manner. And if we've done that, we've met our fiduciary duty to our clients. And we can discuss, of course, the thesis behind multifamily in terms of it's a tangible asset, it's an inflation hedge. We know there's a housing shortage in this country and there's no easy solution to it. And we understand that's particularly acute at an affordable price range. And apartments are the most affordable housing available in the US. And our society's changing. It's a more mobile, more global society. And so I think the lifestyle of renting as opposed to owning appeals to many people. So there are a lot of fundamental demographic and economic factors that indicate multifamily is an excellent place to be.
Very good to know. I mean, that was the next question, that how you are helping investors and what are the asset classes. And you kind of said, what is the asset class where you are working in, and what are the benefits of why are you doing it? Number one, what is the asset class, multifamily, why you are doing it? There's a shortage of housing in the country, and you know the market very well where you live. South Carolina, North Carolina market. Research Triangle Park, Raleigh, Durham, and all that. And these are good places where you guys are investing. And to all the listeners, again, we have Arn Cenedella with us right now. He has been a broker for the last 35 years, and he has seen all about IT because his better part of his life is, his spouse has worked in IT in Silicon Valley, and he's sharing his knowledge. I mean, why should we invest in passively? I mean, the point is, why should we invest passively, and where should we invest in? And that's what Arn kind of told us. So, Arn, what are your best experiences in multifamily investing? I mean, if you have any, just share something with the listeners.
Yes. We've had quite a bit of success with our multifamily investing. And some of it is due to our own action. Some of it's due to the fact it's been a great market for multifamily, and rents have been increasing dramatically in this country in many markets. So we acquired an asset last year. Average rent in the building was $585. Here we are a year later, and our average rent is now up to $750, and our last rented unit is $885. So we've gone from $585 to $885. So we are basically at about our third or fourth year rent projections. So we're really knocking it out of the park. And I think the other thing that I take great pleasure in is tenants are our customers. And as investors, we have a duty to kind of do right by them. And so we love to fix properties up, upgrade the units, provide safe, comfortable, attractive housing, while at the same time providing good returns to our investors. Our crews will be out at the property, and the tenants will come up and they'll go, "Thank you so much for doing this, improving the landscaping, painting the exterior. So we like to get that positive feedback. And of course, tenants don't mind paying an increased rent if they feel they're getting something for their dollar, right? And so it creates a good vibe. And if it's a great place to live, tenants will stay. And as you know, turnover is one of the bigger costs for multifamily owners. So if you can reduce turnover and still increase rents, it's kind of a win-win. So that project is called Carolina Commons. We've rebranded it Cottages at Staunton Bridge, and it's been doing fabulous, and we feel good about what we've been doing.
Awesome. Very, very good, Arn. I mean, good to know your background, the knowledge that you are sharing with the listeners. Tell me anything, any worst experience you have had. I know good things are always there, but sometimes, bad things could happen. Just, not that I want to scare the listeners, but share some bad experiences if you have had any in past. If not,
well, sure. So, we should all be old enough to understand sometimes in life stuff happens, right?
Yeah.
And if you buy 10 different stocks, if 8 of them do well, that's great, right? That's a pretty good batting average. So I was part of a deal in Georgia where it was quite a heavy value add lift. We purchased it during COVID. And frankly, we got a little slow out of the gate in terms of being able to eliminate the non-paying tenants and getting the building renovated and up to snuff. So we may be about a year behind schedule on that. But at the end of the day, we bought those units at a price point where the investors are still going to make a very nice return. It's just year 1 or 2, the cash flow hasn't quite been what we want. But overall, it's a great deal. We bought the units at $42K a door. Wow. And as you know, can you find anything at $100K a door in America anymore? Pretty darn hard. So it's all going to work out. But we've had a few stumbles and we acknowledge it. And we just try to keep moving and we're confident it's all going to go well.
So what you are really saying, Arn, is yes, these things could happen. Sky may fall apart. sky may seem to be falling apart at some point, but as long as we are working with a strong sponsor, the guy who know what they are doing. Yeah, yes, we may not get some cash flow during the year, but that really doesn't matter. At the end of the day, how much you have made on an average, right? I mean, for 1 or 2 years, maybe investors didn't get paid, but that could happen anywhere. I mean, if you're in a stock market, stock may not move upwards for 2 years. You may not have an opportunity to sell. As long as your money is working towards a future, and that's what you said, buying 42K door. I mean, I've never heard of, I mean, I don't hear anything like that. I mean, I bought things below 42 before, but not anymore. I mean, I would, below 100K, nothing is possible in the United States anymore.
Exactly. And so what I would say is, I got into the real estate business 1978.
Oh my God.
So I've been through a few cycles. I've been through times. On my first house I bought, I paid 11.75% mortgage.
Wow.
So I'm not going to lose my mind if rates go from 3 to 4%. I've been there, done that. I invested through Black Monday in the stock market in late 97. Many people may not know, in the early 1990s, 1/3 of every savings and loan, which is basically like a bank in America, went out of business, and interest rates went up to about 16. Invested through the dot-com boom, the dot-com bust, through the Great Recession. And what I would say is, if you take a long-term perspective with real estate, and you go into a deal with proper leverage, don't over leverage, and if you have ample cash reserves, you can ride out any storm. And typically what I've seen over my career with real estate is you'll have 5 or 6 boom years. Then you might hit a little turbulence, and you might have 1 or 2 kind of mediocre to slight down years. And then you might have another year where things are flat. And as all the flat is doing is setting the floor for the next jump, right? So like 5, 6 years up, 1 or 2 years that are a little problematic, and then another boom. And so as long as you have capital and you're not over leveraged, you simply ride out those times. The only way people ever get hurt with real estate investing is if they get over leveraged and don't have ample cash reserves, because they then could find themselves in a situation where they need to sell in a down market. But if you have cash reserves, you just ride it out. So I would say that's a big lesson. Cash reserves, proper use of leverage, and of course, as you mentioned, the sponsor team and the property management are key to navigating these times, both when it's strong or a little bit weak.
Well, Arn, these are golden nuggets, these are the golden nuggets for even the single family investors also. I mean, what you have shared is your 35 years of experience, which people like me, who have been in real estate for 5 years only, I've been around the block for 25 years, working with a lot of corporate jobs, busting ourselves. But people like us do not have that experience. So thank you so much for sharing, enormous beneficial advice.
Well, my pleasure. And there is some advantages to being old like I am. And, I've had a great career. I can say, the other thing I would say is real estate and real estate investing has created for me, for many, many decades now, excellent work-life balance. Wow. So when my kids were little, I coached their little league teams, their soccer teams. I see the big thing I miss not being in California is snow skiing. So I know firsthand that real estate investing can produce a high quality of life where you get passive income, allowing you the time freedom to kind of really live the life you want. And I would say Silicon Valley is a fabulous place to live. I'm thankful I had the opportunity to grow up there and spend most of my life there. But one of the reasons we moved to Greenville, South Carolina is we wanted to get off that hamster wheel, as you talk about, that high tech, go, 60 hours a week, 365 days a year. And so we moved for a lifestyle change, and the real estate investing allowed us to do that. And so I would encourage your listeners to kind of look at it, work with professionals like you, and let you show them how their investments can kind of create the life they want. Because at the end of the day, the money and the returns is just a tool to really create the life you want, right? And so I'm sold 100% on real estate, and that's why I like it, because I know it works, and I'd like to have other people benefit the same.
This is awesome. I mean, I cannot imagine I'm talking to you today after so many years being in real estate. I mean, this is the real nuggets, guys. I mean, I've not heard somebody saying the things which today Arn is talking about, and I'm literally swearing to God. People do share about, returns and passive and tax depreciation and stuff, but lifestyle, the freedom of time that you get out of real estate, the quality of life that you achieve out of it. Real estate is a tool that you can use to have a better quality of life. It's so spiritually fulfilling to me. If I had time, and I would go and probably go and, coach my son's soccer team, so to say, which I heard on you did it. I mean, had a good time in your life.
Yes. It is possible. And the nice thing is, obviously, finances is important. Income is important.
Yeah.
As my mom used to say to me, being rich doesn't make you happy, but it sure doesn't hurt, right?
Yeah.
Meaning that, creating that passive income opens those opportunities up to you to pursue your passions, whether it's, art or golf. I'm a golf fanatic. I love playing golf. Whatever it kind of is special and kind of feeds your soul, you need the time and the financial backing to be able to do that.
Wow. I mean, Arn, this episode of mine was full of golden nuggets, pure golden nuggets.
Thank you.
And I'm thanking you with the bottom of my heart for sharing all this information to my listeners. Hopefully people are getting something out of it, because it is an important episode, and I will continue to share it with my folks in the long run. Are there any final things, Arn, you want to tell our listeners?
No, I don't think so. I think educate yourself about passive investing. Podcasts like this are instrumental. So educate yourself. And then I think the other thing is, if the concept appeals to you, give it a try. And you don't have to pull all your chips in on your first deal. What I would recommend is, if you have a certain sum of money that you can invest, put a little with this operator and give him or her a try. Maybe invest with another operator. So don't go all in on your first thing. Make a few smaller investments and just see how you like it. In my experience, you will quickly learn who are the operators that really produce the returns, who communicate with you good or bad news. Because as we say, sometimes stuff happens. When negative stuff happens, I would rather know about it than not know about it. So educate yourself, find a few good people that you trust intuitively, make small investments with them and give it 6 to 12 months, see how you like it. And then if it's a good fit for you, you could do more as time goes on. So I'd say start slow, test the waters, and give it a shot.
Awesome, Arn. How can our listeners reach out to you? Please share your contact details, Arn, please.
Yes. So my business is Spark Investment Group. Website is investwithspark, SPARK.com. And I'm on Facebook and LinkedIn, so you can always find me. And happy to talk to you. Happy to educate you about the syndication business and or the Carolinas. And, just happy to help in any way I can.
Folks, Arn, thank you so much again for coming onto the show. To my listeners, folks, those who are listening, you have heard the golden nuggets. You know how to reach out to Arn. You know how to reach out to me. I'm in similar business. I do not have 35 years of experience, but I do know a little bit about real estate too. So feel free to reach out to me. Feel free to reach out to Arn, and anything that can be done. I'm sure Arn can do it, teach you, or bring you up to the speed, and so can I. So thank you so much again, and until the next show, goodbye.
Yeah, thank you.
Thank you so much for listening to our podcast. As usual, you can reach me via my website, www.myrealtygains.com, and via email, prashant@myrealtygains.com. I would love to hear from you and talk to you about specific needs you may have. Please schedule an appointment with me via my website, again, www.myrealtygains.com. Stay tuned for next podcast. This is Prashant Kumar signing off for today.